Hello, hello. Welcome to the Five Talents Podcast. I'm your host, Abel Pacheco. I interview the top commercial real estate investors and industry experts so you can learn from their experiences. So if you're an investor, a high W-2 earner, or real estate or tech sales professional that wants to invest in real estate without having to manage properties or leave your day job, then this podcast is for you. Or if you're already investing in real estate, but you're doing it part-time and you want to become a full-time multifamily or full-time commercial real estate investor, this podcast is for you too. You're going to learn a ton. You will learn from real-life multifamily investors and other professionals in the industry. They're going to share their blueprints for success, and I'm super excited that you're here. So I hope you enjoy the show. Hello, hello. Abel Pacheco here, your host for the Five Talents Podcast. We are super blessed to have just an amazing guest, Mr. Scott Choppin. Scott, thanks a lot for joining.
Great to be here, Abel. Appreciate the invite. Happy to be here.
Thank you very much. The pleasure's ours, really. I think you've had a tremendous background, and just, talking just briefly before our show, I know our guests are going to see or have a lot of insights and wisdoms from the conversation that I know we're going to bring them. So I'm excited about that. So if you don't know Scott, let me at least say a few things about him and tell you his quick bio, and then I'll let him introduce himself. But so Scott's the CEO and founder of the Urban Pacific group of companies, and they're Long Beach based, California. Real estate development company. So we're going to talk about some construction, which is really cool. And they were founded in 2000, and they almost exclusively work on, rental housing communities throughout California and the Western US. And they've created some new housing innovation, and they call it UTH, which is urban townhouses, which they basically, do a lot of the similar things on the funding side. They put private capital with some middle-income, multi-generational rental housing, and they're providing some really strong returns for investors. And so I'm excited to talk about some of these, really nice 22% IRR yields that you guys are producing. And Scott, you're the man. So let me turn this over to you. Tell us about yourself in your own words, and we'll just start the conversation here, my friend.
Yeah, I appreciate it. So, I grew up in a family that was involved in the real estate development business. It's not a career you'd like necessarily, figure out in the early years of, learning that you want to go do. It's like an obscure, career choice. So I grew up around it, had a background in it, got out of high school and worked in the construction trades for a few years, for about 3 years. Which, taught me about construction and also informed me like I didn't want to be doing physical labor for the rest of my life. And at 18 years old, came across a series of books about real estate investment. Now you'd say, hey, this guy grew up in a family of real estate developers, so he must know all about it. And that's not correct, because I saw what I saw in my family and I went to see projects, but that didn't teach me how to do deals and be an entrepreneur. And so this book sort of opened that, it's one of those classic 50s books, invest in real estate on the weekends and make $1 million, right? Yeah. But what those books showed me was how to, what deal making was done, right? How to, buy low and sell high. I mean, it sounds, ridiculously obvious, but, when you think about it, you go, well, how do you make money? And do you, do you need to make money, right? And I was very fortunate at 18, 19 years old. I worked in the trades. I figured out I was not going to produce the financial ambitions that I had for myself working in construction. Great. We work with a lot of construction people, good folks, salt of the earth, very valuable, but it wasn't going to be my career choice. In fact, I'll tell a funny story. So I was working on one of these apartment projects. So my construction career started in apartment buildings, building new construction. Mm-hmm. And, nothing related to my family, but the developer of the project rolled up, and nice car, wearing the suit and tie, pointing, bossing people around. Right. And I go, oh, I know who that dude is. I didn't know him personally, but I know that
I know
guy,
who that guy is. Yeah.
And if it was like an epiphany for him, I go, that's what I want to do.
That's what the guy.
I wanted to be that guy. And so that was pretty informative. Really, that set the path for me for the next, several years of, getting a college degree and working professionally for, for like major development, nationally recognized development companies. And then ended up in 2000, leaving, my professional career to start Urban Pacific. And now it will be 21 years in March of operating this company.
Yeah, that's awesome. And the rest is the history, my friend. The rest is history.
Yeah, a lot of
Well,
war
that's
stories in there that I'm like I'm gonna ignore for the moment.
well, man, that is awesome. And if you want to hear more about Scott's background, Scott's done a ton of podcast interviews, like 60 something, so you could just hit the old Google machine and, dig into a little bit more about how he got here.
Mhm.
But that's just a tremendous spot. I think so many of us, we don't really know what we're getting into when we say, I want to be that guy. I want to
Mhm.
own these apartment buildings. I want to be the commercial real estate investor. Like,
Yeah.
you don't really know until you're actually doing it. And for 20 years, now you got an idea. But
Yeah, like we've figured out a few things, made a, as I put it, like we've deposited, a fair amount in the bank account of experience.
mhm.
But it's all
Yep.
good. We're loving it. I frankly wouldn't choose anything else, Abel. It's the most challenging career I know of, like, because developers have to do so many different things: politics, construction, financing, design, markets, economics. I'm a person who's relatively restless. So switching, going from talking to a council member to talking to the bank to raising capital to designing buildings and figuring out the economic cycle, frankly, I wouldn't choose it any other way.
Man, that's awesome. Hey, I love it. I love your description of it. That's so amazing. I would have to say I'm gonna opt in. I want to do the same. I want to do the same.
Yeah.
I'm younger in that career or my 10-year cycle as you,
Mm.
but man, I hope to look back on it 20 years from now and say that was amazing, and
Yeah.
that's awesome, man. I would describe myself as a second generation real estate investor as well,
Mhm.
and my dad did nothing like what we're doing, now. He had one rental property, and I go, hey, he was an investor, and
Yeah.
I'm the second gen, and that's
Mhm.
awesome. So you have kids,
I
and
do. I have three. Yeah. 19, 17, and 13. Two oldest are boys, and my youngest is my daughter, Jenna.
do they want to do, are they in the business, or are they kind of in the background, or what?
Yeah. So my oldest, Sean Patrick, is 19. He's actually at USC right now, and
Mhm.
he enrolled in what's called their BRED, or Bachelors of Real Estate Development. So they actually
So
have a
awesome.
major in the real estate development world. I think he's like figuring out like what he wants to do. He has certain ambitions. He wants to be successful. Obviously, he's seen, the background in the real estate development world. And like kids do, I was the same way. It's like sometimes you go, oh, I don't want to do that. Like my parents do it, so like I'm going to do the whatever is opposite.
Hmm.
I think Sean Patrick is like has aspirations to be in the investment world versus development.
Hmm.
And I'm here to be a resource for him, and guide him. He's got to be the one who figures out what his ambitions ultimately going to be, right? Like what his objective is. My main thing that I tell my kids is, like, in this environment we're in this economy, and this where we are in the like technology development, and you really being an entrepreneur, I think, is going to be critically important. And things like competitive learning practices. You can't graduate from high school and even college and just call it good, and I don't need to learn anymore. It's like, no, in fact, what I tell my kids is like, your college career starts your learning. Now that's where I'm going to help them most, is like all that. In fact, what I tell them is, I go, all the stuff it took me a long time to figure out, I want to give to you earlier. So you can figure it out like long before I did. Took me, years in some cases. So that's the story we're in at our house about, career choice and learning. I mean, Abel, it's like, and you're even doing your own development project you mentioned earlier. It's a high risk, high reward business. People who are new make more mistakes than people that are seasoned, and even seasoned people still make mistakes. And so I've come to my career, like, arriving at the fact it's whoever makes the least mistakes wins and produces the most profits. I mean, it's a harsh like way to think about it, but it's true.
100%.
So,
Yeah.
that's in fact what I work on predominantly right now is, forming and developing teams and systems and practices and new innovations that like we avoid, major mistakes. There's always going to be little, mistakes, what I call friction inside the development process. But, for anybody who's listening, who's, earlier in their career as an investor developer, like, know that about yourself. You're young. If you self-selected to be an entrepreneur, you have the capability to take risk and the stomach for it. Then what you got to do is pair that up with like, getting the crap beat out of you and learning hard lessons so you don't do that again. And, use people, mentors, internships, joint ventures, like have other people's mistakes inform how you do things, and you don't have to pay for them yourself.
Yeah, I love that. Yeah, I think that's so key. I'm realizing the team aspect in commercial real estate is just so different than like this. I did single family. I had a single family run for 10 years, and we got up to like 8 properties in the portfolio. And it was me and my wife, and we weren't really bouncing any ideas off of anybody because nobody really was going to help guide us through or cared about it or whatever. And then the commercial real estate side, I go, well, man, there's absolutely a way to kind of partner and put everything together.
Mm-hmm.
And, I was telling somebody the other day, I don't remember who, but I don't know how to sit in an apartment complex. Like if I was in a front office sitting in the chair and somebody new came in and like renters and showing up, I'm like, I wouldn't know what to do there.
Right.
But the thing is, like, you don't have to. You build the team, an amazing team. And on the construction side, it's like, man, there's architects and engineers, and there's somebody to help you with the MEP and the radon, the appraisals, environmental. You're like, I don't know. There's experts in every one of those areas.
That's right.
Kind of comes in, and that's the best team possible, best team formed, least amount of mistakes along the way, and you're going to win. That's awesome.
Yeah. I'm right with you, because like I used to, probably like you did, you just go, oh, I'll go learn. I got to do this thing, research, learn, read books, watch videos, and, still do that, but I do more of that in the innovation and new trends and economic cycle side, right? Like big picture economic strategy, if you will. And right now, like when it's something new, I'm right with you. It's like, oh, I'm not going to do it. Who do I know? Or who can I find? Or who knows? It's and really it's a very dramatic change from, I think, what we're taught in school, and even our culture in the US is maverick, right? Lone Ranger, I'm going to do it myself, and, I'm going to go to the top of the hill with a machine gun. And I'm going to kill the enemy and save the day and save everybody. And that's cool. I love this, I'm into that like narrative as much as anybody. But the reality is 2 people are better than 1. 3 people are better than 2, right? Like, brains and thinking and action are amplified through working with others, where if, Lone Ranger is a weak position to be in, trying to do it on your own and by yourself is like the weakest configuration that exists. So, everybody don't do that.
Yeah, no. So, let's just, I think maybe dive into what you're doing today, right? The UTA, urban town houses, and then, how you do it, development, just take us through a little bit of education, man. What's a day in the life of?
So part of like being a real estate developer is it's different than being a real estate investor. I always sort of put those together, but more recently, the last few years, I'm really thinking they're distinctly different skill sets, although there's overlap, right? That's what so sometimes has people think that they're the same or similar. And so really, as a real estate developer, and particularly going through the 2008 recession, it really taught us a lot of, good and sometimes hard lessons. And one of those lessons was to not compete in a space where everybody else is competing. So like product type, locations, geography, unit design, right? Unit type, those kind of things. And so in 2016, 2017, we were finishing a group of projects that ended up being very successful, but they were in a specific product category, and that was like studio and 1-bedroom product in a downtown location, right? So, earlier you were talking about, nothing over 3 stories. So think podium stuff, right? In fact, it's going to match a couple of pictures in your background, but, think 4 or 5 stories over a parking structure below, right? Like real
Yeah,
urban downtown
urban.
stuff.
It's cool.
And, great product type, very much matched the millennial demographic that was coming out into their like newly renting apartments lifestyle or part of their life cycle. And, great product. But here's what happens when you have that sort of economic, movement, right? Like demographically, all your competition recognizes that too. So all the big guys come in, and really everybody gets into that same space. And so by about 2016, 2017, we had started in 2011 doing a series of projects. By 2016, the market had come to that space, right? Everybody was in it. All the big guys, Trammell Crow, right? Holland Partners, JPI, all the, Alliance, all the big guys. And so that by itself was a signal to me to look at the marketplace and go, do we need to do something different? Because everybody's like piling into that space. And, in that 2011 to 2016, we're still coming out of the recession. There's a lot of growth. A lot of people are still, sort of moving into the apartment sector, and it's only accelerated even in the last few years. And that was just for us, like in 2016, we're like, we sold some assets, and it gave us a chance to look at what do we do next? Like, what's the next, group of projects? And do we want to do the same thing? And really, it started to really appear to me that we didn't. Like, we needed to make a different move. And so we sold off our last group of assets in late 2016. The capital markets were going through some sort of like a flat spot, I called it, where lenders and equity investors are like, oh, the market's like really good right now. Maybe this is a point we need to pause. Like, so I was saying that, they were saying that. That was another thing that informed me. So we started looking around for different product type, and, didn't have necessarily, we knew we wanted to innovate. We knew we wanted to be contrarian and do something different. We didn't know what that was going to look like, but we ended up buying a piece of ground in downtown Long Beach, actually from the city of Long Beach, where we're headquartered. And we bought it really well, right? Not right in the central business district of downtown, but like, let's say one sort of neighborhood outside of it, still downtown, but not the central core. And this site, basically, we had the ability to develop a certain number of units. Like, we were limited on unit count for density, but the zoning allowed whatever unit type we wanted within that. So whether you did a 1-bedroom unit or something different, like, you could still fit it, right? And so this site sort of lent itself to doing a bigger townhouse rental unit. So we go, oh, we can fit a 4-bedroom townhouse unit in there. And I said, okay, to the architect, let's go. We can fit it in there. It's something different. Interesting revenue generation story, right? A 1-bedroom would get, $2,000 a month. A 4-bedroom should get more. Like, is it, 2,500, 3,000, 3,500? What's the story there? And so we did that project, and it was key for us that we bought the land so well, Abel, because we could basically experiment. And even if the thing went bad, we'd still do okay. Like, we're sort of break even. Worst case was break even. And it gave us the capability to do this experiment. Well, it ended up basically that the 4-bedroom units were a 2-story townhouse with a 2-car garage, 4 bedrooms, 3 bathrooms, right? And that was, pretty atypical. Ended up, we sold the building empty to an investor who wanted to pick their own tenants. We're fine. They wanted to pay cash. They were willing to, waive the contingency of leasing up, which is unusual. And they went out there and they got $39.50 for the first unit they rented, right? Like, way, way above what we were underwriting. And so we're like, dude, what do we miss here, man? Like, this is, I even was like, exceeded my expectations.
Yeah.
And so
how many units was it? How many units was it?
It was a tiny project, was a duplex.
Okay, so
grand total of 2 units. Again,
okay, gotcha.
Another, the experiment, if it went wrong, it was gonna, and I've never done a 2-unit project in my life, by the way. Well, and I'm happy to do it. It was an interesting experiment, but that really was the seed project for what turned into the UTH program. So on the next project, we said, hey, if 4 bedrooms is good, maybe more is better, right? Let's sort of, experiment more. So we sort of worked around a 5-bedroom unit. And I said, hey, can we do a 6-bedroom? Is that too crazy? Like, what's the deal? So we settled on a 3-story townhouse instead of 2-story, went up one level. We did 5-bedroom, 4-bath, still 2-car garage on the ground floor, still a townhouse, right? So your 3 levels are all your own same unit, like a row home, would be another version of it. And so we basically launched a series of projects in that, what we named UTH, or Urban Townhouse Program. And the early projects, including the first one, were all like a continuation of the experiment. I call it the test phase, right? The test phase was to do 3 things. 1, can we build it for a projected price, right? Construction costs rising is always a story we're all in as investors and developers. 2, could we rent it for what we, underwrote, right? Yeah, this guy rented these units at $39.50 or whatever the price was. We need to, is that sustainable? Can we do more of that? Like, okay, was that just an anomaly?
A one-off, yeah.
Super lucky on, on a small project. And then the third is, which, all your investors will, and sponsors will, could we get the values that we wanted, right? Can we either sell it for the values that we project, or in a refi, do we get the appraised values that we need to refi it appropriately? And in the demonstration phase, the first 4 projects, we in fact proved that all 3 of those, like even above expectations. So that 22.66% IRR, programmatically is over the first 4 projects as we built them and sold them. This experiment, we got bigger projects, we got more of them. Once we demonstrated that it was going to be a model that we could sustain, like we could trust that the numbers would work correctly, that we could build it, rent it, and sell it or value it at the right price, I go, let's do more of this, right? This is clearly a niche. Nobody's doing 5-bedroom, 4-bath, by the way, Abel, right? Like, at scale, certainly nobody at scale. And so go, fast forward, really 4 years later, bringing us to today, we're in now, we finished those first 4 projects, sold the first 3. And now we're in a story as of about 2 years ago that we want to build and hold all this for long-term, right? We don't want to sell any of it because we think it's so valuable and so like unusual and niche, and the families love the units. They're willing to pay. They can pay now during coronavirus. It's a roommate groups working from home. That's a big growth area. We're actually in now 8 additional projects, all bigger projects. We're growing the scale both in size and volume of projects. And then actually you're the first show that I'll mention this on, but we're in process of putting together a $30 to $50 million real estate equity fund that will be specifically raising capital to invest in this specific UTH program.
Yeah.
Like we, build, develop, and hold in a portfolio really throughout California, up to $50 million worth of product, which, probably is going to be 12 projects, give or take, depending on the size of the project. So our projects right now range from 15 to 85 units in that, what we call now the production phase. And of course, we want to get at bigger projects, just more efficiencies, better cost production, better construction costs, that kind of thing.
All right, on. Well, that sounds so exciting. There's a lot to kind of dive into. And hello. You're listening to the 5 Talents Podcast. I'm your host, Abel Pacheco. If you're enjoying this podcast, then I know you're serious about achieving financial freedom. Are you ready to create your own path through multifamily investing for yourself and your family? Then I know you're going to appreciate our Investor's Guide to Multifamily Investing. It's titled Tackling Commercial Real Estate the Easy Way. We use this guide to invest ourselves in $93 million worth of real estate. So we're going to show you the basic mechanics of multifamily syndications and how to evaluate your next passive investment opportunity. So the best part, if you subscribe to our podcast now, leave us a review and a rating. I'm going to give you a free copy of our ebook. So please take a moment to do that now. Once you've done that, go to 5tcre.com/ebook, 5tcre.com/ebook. Make sure to let us know you left a review, and we're going to send you a free copy. So thank you so much for subscribing to the 5 Talents Podcast. We really appreciate it. And let me kind of go back to a few things that I heard at the very beginning. You mentioned that the geography, the market, the unit type, and the design, what led you to try to differentiate yourself, that sounds like it was it was absolutely key, clutch, along with the low price of land, or the right price of land. So actually you
Yeah.
could do a little bit of experimentation,
Hmm.
but you usually don't hear experimentation and development or investing. It's like,
Yeah,
no, man, we're not experimenting for nothing.
that's right.
So maybe talk a little bit about that. Like what were you seeing in the geographies, the market, the unit type design, and then
Yeah.
what said, hey man, let's try to experiment a little.
Well, this goes back to that, I referenced 2008, and
Yeah.
right, and really in anybody who's been through a recession, you really learn what's oversupplied versus what's undersupplied, right? Like that's a key tenet of how I think about like
Mm-hmm.
when we do new projects or new geographies or new locations or product type is what's the competitive landscape and is it oversupplied? I mean, you're based in Texas
Mm-hmm.
and, different than California is, right? If like, housing costs or if rents go up and values go up in Austin or San Antonio, then people can buy land, on the periphery and continue to build new, or maybe they build in downtown. That happens in Texas too. But the market's not restrained any other way other than the marketplace and rental demand and values, right? And so that gives the opportunity for oversupply to be created, right? And developers are notorious for everybody descends in a marketplace and, everybody's trying to get while the getting's good, right? Like you said, nobody wants to experiment. They go, oh, everybody else is doing this, the crowd following the crowd is the thing in development. And so then you learn from recessions that when the crowd all jumps into a space and then the market turns against that space, either geography or product type or, whatever that market sector is, then you immediately expose what the oversupply is, right? So somebody's always last in, right? So you got, downtown San Antonio and there's demand, for 2,500 units, developers descend, they do 3,000 units and the market turns, well, that last 500 units or last 1,000 units, the last to arrive gets hosed,
Yeah.
right? It happens. And so what I did was the opposite of that. I go, look where everybody is going, where everybody is descending into that market in force, right? Like piling into a marketplace. And can we do something that's still like in demand, but is like different, right? Because what happens when people start to think about going a different direction than the crowd,
Yeah.
right? In real estate, people like they'll go two things. They'll go, oh, either that different place that you're going, it doesn't have competition because there's no demand there,
Mm-hmm.
right? That's what a lot of investors will say. They go, oh, well, you've got this niche and nobody's competing with you. That tells me that there's no play. There's nothing to do there because there's no demand.
Mm-hmm.
And that's true. And so then the innovation comes in to find a market sector that's undersupplied, but does have demand. And so I didn't give you, a lot of background info, but the first few years that I worked in the professional real estate development environment, I worked for a company that used to be called Coffin and Broad. It's now KB Home, big home builder. And the group I worked for was a division that built affordable housing. So rental, tax credit, finance, basically true affordable housing. And that background gave me a view into the world of what it was for families to rent affordable housing. And I mean like big families. Like we used to build projects that had 4-bedroom apartment units, right, in the affordable housing projects. Those things were always massively undersupplied, right? Like we would, build 100 units and 15 of them were 4 bedrooms. And we had so many more applications for those 4-bedroom units than we had units, like way oversubscribed, much more so than the 1s and 2 and 3-bedroom units, right? And so that always stuck in the back of my mind. I go, oh, there's these families that, of course, affordable, income families like at or below 60% definitely need that. But if you think about it, right, the housing market's not building units for big families. It's just
Mm-hmm.
not,
Mm-hmm.
right? And so if you're a family of 6 or 8 and you're mom and dad and maybe you have an adult child living at home and 3 or 4 people are working, maybe grandma lives with you or in-laws, right? And you look at the marketplace, well, you go, oh, everybody's doing studio and 1-bedroom units. So that family doesn't even have, if they want a new unit, there is no place for them to go. Now I'm speaking specifically, maybe California is different than other markets, but the idea of multi-generational, multi-bedroom units is not part of what the development marketplace serves up. And so that was really, I go, oh, this 2-unit project plus my background in affordable housing. I go, oh, this starts to come together. And I go, there's this interesting idea. I don't know how it's going to work. So let's test it. We can't screw it up too badly because we bought the land so well. But it really, and it developed over time, right? This is probably a 3-year process. But after a while, I go, oh, here's a middle income. What we chose to do is go not true affordable. We thought, here's working class families that make 80 to 120% of median income. They make too much money to qualify for the true affordable housing, right? They over income for that. They don't live in the sexy high rise in downtown San Antonio or downtown Houston or downtown LA, right? Because that's a studio unit. They don't afford it, nor do they want to live in it. And so their only choice is to rent a house, or they live in more than one unit, right? Classically, right? And so we said, let's take this background in family housing that I had, plus this unit that we're experimenting on. And I go, we've got an interesting makings of something here. And then over the next couple of years, it really turned into this full focus and the creation of the UTH program to go, look, let's bring virtually unlimited private capital to a workforce housing family and that's underserved in California, high cost, and families are rent burdened above 30%, 50 to 60% on average. Here's a really interesting social impact story with an undersupplied marketplace with relatively unlimited private capital. And that was really, I started, form the story, go, oh, this is really cool. This is what I've been looking for, to be doing something that, has a good social impact story, can produce great market superior returns, is in demand, low supply, right? The Trammell Crows of the world, they're not going to do 5-bedroom units, maybe ever, or at least very limited. So we have this sort of, Warren Buffett calls it a moat, right? It's a way to compete in a way that keeps other people separate from you, right? Like they can't, attack your program directly because it's so different, or you have some technology or some patent or some style of doing business that keeps people away, right? And I'm not sitting here and saying, hey, we're bulletproof, that nobody's going to compete with us. We're absolutely, no, they will. And so we'll, of course, continue to innovate, in new ways.
Oh, that's a lot of good insights there. Thank you so much, Scott, because you talk a little bit about the market, supply and demand, competition, market cycles, first to kind of understand or see the need, and then you guys were able to fill it. And then in other markets, obviously, there's always somebody at the tail end trying to get in, and they get, like you said, they get hosed. But so KB Coffin Bra, I think that's we have KB, a lot of KB houses, so I know who those guys
so
are.
Actually, funny story, side note. So in San Antonio in the old days, there was a company called Rayco.
Okay.
Like biggest home builder in San Antonio. And they had this production model of building single family houses that was unprecedented, like manufacturing houses, like their systems and their production cycles. Actually, when I was at KB, they bought Rayco to adopt their model to other markets. And plus Rayco had this killer market share, like, the biggest market share in San Antonio, which you live there and but great market.
KB is everywhere. Yeah, I see all their signs everywhere. And that's awesome. I think
that's why you see their signs so many places, because they took over the market by buying.
That's awesome.
They bought that market share, but good for them.
Yeah.
It was a success.
And so a couple other things that, to ask about as you're talking about this competitive landscape, right, is, well, this is for our guests, right, our listeners. If you are a passive investor or a general partner and you're trying to figure out, hey, which market should I be in? Something from a supply and demand spot, it's, that's just like classic, spot where you want to be in. When you have demand that's high and supply is low, prices are going to increase. And so in this test that Scott did with, a piece of land, and hey, let me try a couple units, you get this massive amount for a huge rental amount. Well, then that proved to be the case. And then you saw it again with the KB in San Antonio, which was, hey, you get all these applications for these 4-bedroom houses, and y'all didn't build enough, or whatever. So there's another indicator, and you're looking for those indicators of supply and demand. What is in demand, and you are trying to kind of meet that, line on a curve a little bit, and that might be a little bit of your speculation. But Can you talk a little bit about the other data points you may use, like formal data points that like anybody can go use, maybe websites or tools, or, you know, when, what are some of those things that I'm looking at to see supply and demand where they're meeting, and, you know?
Yeah, so I look at it in a couple different ways, and it's a great question because so like I mentioned earlier in passing, I spend a lot of time now looking at very high level economic cycles. So think macro, big picture, national, regional economic cycles, right? So
Mhm.
that's one thing to keep track of. And then you got to look at your local market, you know, both the cycle and also the competitive landscape. So I'll give you an example. So I think I was having a phone call with somebody, I don't remember who, but basically somebody was just calling me to ask questions. They go, "Hey, I'm working on this deal. I'm going to develop this deal. And, you know, what do you think?" And, you know, I was asking for some input. So I was, you know, gave them some help. And I said, "Well, tell me about your design." So that, you know, not, you know, where and what, not really important. But he said, "Oh, well, I'm doing all 2-bedroom units." I go, "Why are you doing that?" He goes, "Well, I thought that was right." I go, "Based on what?" You know, I didn't want to be like a jerk about it, but I go, "Well, like what study did you do?" And they go, "Oh, I didn't." I go, "You know, I talked to a couple of people and, you know, looked around. That seemed to be the right thing." And I use this example because it's the classic, you know, early career or starter or new investor, new developer move, right? To think that what you know applies to the marketplace. And it's exactly what you said about networks. Like now you go, oh, go talk to somebody who really knows about it, right? If you want to develop new housing, go talk to your broker and all the brokers in San Antonio who sell investment sales of multifamily apartment assets, and ask them about demand characteristics. What are the best selling unit types, right? Projects that have 2 bedrooms, do they sell well, or is one better, or is a mix, or whatever, right? So what this guy didn't realize, I said, "Do you understand that your 2-bedroom unit happens to supply new units into the most pervasively available unit type in your marketplace, which is a lot of 2 bedrooms?"
Mhm.
I go, "Don't do that," right? I mean, you know, I'm not saying go do 5 bedrooms. You don't need to do what we do. Ours is an extreme choice, but very much informed based on, you know, data and background. And so, like, the move would be to go get stats, talk to your brokers, right? Who do, and by the way, it's brokers who sell apartment assets, because
Mhm.
if people go, "Oh, I got a buddy who's a broker," I go, "What does he sell? Single family homes?" No,
That guy.
you need your multifamily broker.
Yeah.
Those are the guys. They know cap rates, they know operating expense ratios, they know, gosh, they probably know the rents, what's new, what's selling hot, who's coming in the market, like, you know, buyers and who's selling in the market. I mean, all the stuff that you really want to know for this background. And or you can hire a company that does market studies. So like a guy like my buddy Rich Gallis at Concur Group, a nationally recognized market study firm, and hire them and go, "Hey, I want to develop new apartment assets in San Antonio. What should I be doing? I'm thinking it's 2 bedrooms, but what do you say?" "Oh, no, don't do 2 bedrooms, dude. That's like a very competitive space. Maybe think about ones or threes or whatever," right? I'm making that up.
Yeah.
So it's definitely about networks, what I call networks of capability, right? Which is, you know, who is the strongest information source? Maybe there's 8 brokers in the local community. Who's got the best reputation? Who's got the most sales, right? Who's got the highest valuations in the sales? Those are the kind of people that you want to gravitate to, and recruit them into your network. "Hey, dude, I'm new in the marketplace. I'm going to be building a new apartment buildings. If you help me underwrite these deals, I will give you the sale. Like when I go sell them when we're done, like let's trade," right? You can recruit that person. Market study guy, guess what? He wants to do market studies and get paid for it. So there's that thing. But you can do a lot of research on your own, right? So, you know, like interesting websites, like you wouldn't think of it. Zillow is a great resource for figuring out the rental market in a given geographic area, right? You can draw the circle on the map and get, you know, rental comps right in the local area or your city or whatever. A lot of those, like Zillow, have good market reports, right? You can get market reports on rental rates and increases, decrease market trends for rental. You got to go to the bottom of the website and look for research. Click on that. Now, of course, they're for sale centric. So the vast majority of their data is about for sale. But if you sort of weed through it, they'll actually have reporting on rental markets. In fact, Zillow is probably one of the, because our product's so different, Abel, like we, you know, we can't look on apartments.com and find a lot of 5-bedroom townhouses for rent. I mean,
Yeah.
it's just not in the marketplace. So we use what I call alternative, sources. I mean, even something like Craigslist, we don't use Craigslist per se, but we'll use it as a gut check. Hey, what do houses renting for? If you got a 5-bedroom house and we're competing with our 5-bedroom rental unit, well, we want to know what that house is renting for. Now, of course, we're always generally below houses in our rental rates, right?
Mm-hmm.
Like on purpose. So there's that. So you got your local market info. That's people. That's networks of capability. That's some resources like Zillow. CoStar is a good. There's a lot of multifamily market research, but CoStar is very expensive. So if you're a new investor or a new developer and you don't necessarily want to pay for that, I mean, we pay for CoStar just because we want to have that data. But I don't really trust CoStar to be good rental comps for our product because it's so off the
Different.
scale on unit type that they just don't have a good database of units, and that'll grow. In fact, now today we're building so many projects in Southern California that we're becoming our own set of comparables. Like we have our own database of our own projects that are rented and sold for valuation. So that's sort of interesting. Haven't had that before.
That's awesome. Well, this has been an amazing conversation, and I feel like we're just kind of like scratching the surface. But
hey, Abel, that's the reason you can have me on another time. How about that?
Yeah, and we host a weekly Wednesday 12 p.m. meetup. Maybe sometime I'll have you come. Be a guest at the front end and
totally
just do some networking afterwards and meet some new folks, but at the same time share a little knowledge of what you have.
That's great. I love the Q&A. I mean, I don't know if it's a Q&A format.
It is.
That's the best. Because people always have. Well, yeah, I heard you say this thing, but my thing's different. Like so that's always such a powerful environment. So
yeah,
we'll love to do it.
Man.
Yeah,
we'll do it. Well, is there anything I didn't ask about? Anything that you wanted to bring some exposure to? Anything? Definitely your name. Your name, Scott. Your contact information. Sorry, but anything else in general that you wanted to bring some exposure to?
What I'll do, Abel, is I'll offer to your listeners. They can go to our website www.urbanpacific.com/ebook. And that'll bring you to a landing page and sign up there and you'll get the ebook. What we're putting out right now is how to thrive and survive a recession, which I think is good lessons that we took from this 2008 era, relatively real estate centric, but a lot of just how to be an entrepreneur and go through a recession. We're fortunate, as you guys have probably seen that real estate's, at least residential rental, real estate and for sale is even doing better, but we're relatively unscathed right now. But recessions are a fact of life. When people are new in the business, they tend to sort of underplay what a recession can do. And sometimes that's true, sometimes it's not. We did that in 2008 and, we learned a lot of hard lessons that, got, put into this ebook, but go and sign up for that. When you're on our webpage, you can look at our investor education section, just a ton of videos and papers and blog posts about many of the things we've talked about, how to track economic cycles, how to underwrite apartment development deals, how to assess zoning, right? A lot of people who might be looking at transitioning and development, we got a lot of background info, both as a developer, how to be that, but also as an investor looking at investing in development projects. Although you're not going to be the developer, you need to assess the investment if you're not familiar with development. Maybe you're looking at making that move to, try to increase your returns because the value add landscape, let's be honest, is a very competitive environment. Even now deals are highly sought after and, it's challenging to find, sometimes enough deal flow. And that causes people probably like you're thinking, start to look at development as a outlet to make that move. And then if anybody want to get a hold of us, go to our contact page, our entire team, email addresses are all there, get in touch with any of us. My email and my cell phone number are there. So if people want to reach out, feel free.
Yeah, that's awesome. Yeah. That sounds like a great resource, a great ebook. And we'll go there, check it out. And what is it called again? How to survive
and thrive in a recession.
All right. Yeah, it's a great title too. I'm working on a full length book. I created a small ebook, how I invested passively into all my first deals, but I go, the title's, I don't know if I like the title. Tackling
Yeah.
commercial real estate the easy way.
Yeah.
That's what I said. I
Yeah.
go,
Creating a
okay,
good title is like a little bit of an art form.
but
And I don't profess to be all that great at it. I've had a lot of duds. So
this is not your first one, huh?
yeah, you got to throw out a bunch and you go, no, that doesn't work. You sort of try it on. You go, oh, that's bad.
Yeah.
Right. Even being on a show like yours and speaking the thing, you
Yeah.
go, oh, that's an awful title. Get that.
This sounds like a good one, man. I'm
I
excited for it.
appreciate
And
it.
then
Yeah.
let's see, before you go, I guess one or two last things. If somebody's really trying to, kind of break into the development world versus the investor world, any advice, any wisdom? You've 20 years of it.
Yeah.
I'd be remiss if I didn't at least ask this question before you jump.
Sure thing. So first thing people can do is go to LinkedIn and look me up under Scott Choppin on LinkedIn. And then under the articles that we publish there is an article I wrote called 6 Ways to Build Your Real Estate Development Career. It's very specific to what you're asking. And there's a bunch of things in there. But, one of the things is, that I really focus people on when they're talking about moving into that space is what I alluded to earlier, which is, get a mentor, be an intern, or do a joint venture. Those are all sort of different versions of the same thing, which is you're going to pair up with somebody else who knows a lot about real estate development. You got to be, selective in your choice of who you pick to, be an intern for or JV with. But basically what you're going to do is you're going to sort of give something up in the beginning to get a lot of education, right? Michael Blanc, you've probably listened to his podcast, but he's a great advocate of, hey, in your first deal, pair up with somebody. Like, don't be a bonehead and try to know it yourself. This is back to that Lone Ranger thing that I described before. And so I tell people all the time, in fact, we regularly entertain interns. We have usually 1 or 2 going on at any one time. And I've had several people that have, finished up their internships with us and go on to basically launching successful real estate development careers. Like our, internships are unpaid. And then, a lot of people, I got to work for free. I go, yeah, you got to work for free, but here's what you get in trade for it. In fact, one of our earliest interns, a guy named Mike Lanza, he called me several months ago and he ended his internship with us and went to work for a couple other companies that weren't real estate development. But then several months later was able to interview with a real estate development company and land the job as a project manager. And he called me and he goes, dude, I didn't know how much you taught me until I went to this interview and I got this job. And almost everything I talked about in the interview was stuff that you and I and in the internship had worked on. So I use that as an example. In fact, Mike's, assessment was, dude, I would pay you a lot of money to know what I know. And if I were to have to learn it again, in fact, he's going through the USC urban planning program, which is like 40 or 50K for the 2-year program. He goes, easily what I did with you over a year in an internship was worth that and probably more.
Yeah.
And so I only offer that because people they'll get itchy about working for free. Right. They go, oh, dude, I don't want to do that. And then I'm not saying do it full time. And if you could, you learn faster, but find your local developer and you're in whatever location you're in, and you may have to call, dozens and dozens. But the offer is, hey, look, I will come and work for you for free. I will go do, all the crap stuff that you need done, that real estate developer, go to the city and get the permit pulled and call the plan checker and get this thing pushed through, whatever. But that will be so valuable. And then, of course, you got to pick the right people and the right company. They got to be oriented to actually educating you. And of course we do that because it's, part of our set of practices. But that alone, hey, get a mentor, pay somebody. I'm not, saying, go do that with us. Although we have that offer, but, it's pay somebody to impart knowledge. Joint venture is a different version of that, right? You go, oh, I'm going to give up, 80% of my deal to somebody else. That sucks. I want the whole thing for myself. Yeah, you take 20%, but you get to sit there and learn from this person and make that part of the deal. Hey, I'll bring you this deal. You pay me 20% or whatever. I'm not making that number up, but teach me. Let me be in every meeting. I tell people, hey, when you're a joint venture, read every document. You see stuff on email, you see that title report, you see those backup documents, you see that contract, you see that this, that, read everything. right? Like there's nothing you could spend time on that would be more important than getting full exposure to the development process. I mean, that's what I did when I was a project manager, man. Nobody paid me extra, but I read everything. And, I asked, 80,000 million questions to people I worked with. But, the point is that you get to like participate in somebody else's knowledge and watch them do it and see them do it. And by the way, your 20% is probably going to be more valuable. 100% of zero is, worse than, 20% of 100, right? When you're profitable. And again, Michael Blanc has this thing. He goes like, there's nothing more valuable than that. And you give up a lot, but you get a lot. And I think people just don't realize how much they get. And so I try to use these examples of like things that we've seen, but learn from other people's mistakes, man. Avoid your own. You get to learn on somebody else's dime if you're an employee or, an intern or whatever. It'll be well worth it.
You're bringing us so many great memories, and all this is really good knowledge and insight. When I ran a Cutco office, like when I was younger, I don't know if you know what Cutco is, but like these knives, right? And we had a recruiting office, and so we would recruit high school and college age kids, and they would go sell knives. But anyways, in this office, I ran my district manager's office. I was the like sales manager, so I did well at sales. I did well at, helping her with stuff. And anyways, she would like let me run some of her interviews and trainings and all that stuff.
Yeah.
Well, I didn't get paid to do that. And I got paid to sell. I got paid commissions there, but all the other stuff was just free time.
Yeah, right.
To get in there. Well, she used to tell me, well, that like I could go do what you're doing right now and make so much more money.
Yeah.
And I'm letting you, when I let you do this, you're costing me money.
Yeah, right.
Because you don't recruit as well as I do or train as well as I do. And, it didn't set in until years later that I was like, man, thank you so much for letting me get in there.
It really is. And I don't fault anybody who doesn't recognize that value, because the fact that you're new to that arena means you don't know how to value it. Right. And particularly for me, real estate development is such an obscure like career choice, right? It's like, you can't go get a book and go, oh, how to be a real estate developer and do this and do that. I mean, maybe somebody will write a book on that someday, but the more obscure the career is, and some careers are obscure and don't make you very much money, but it's the ones that are sort of hidden, right? I mean, even being a real estate investor isn't necessarily you don't go to your high school counselor and they go, oh, your test says you should be a real estate investor, right? No, never happened. Even being an entrepreneur isn't necessarily, I mean, probably more so now than when I was, in high school, but those are the places that you need to get the knowledge from some non-obvious source. Like you can't go to the library and check the book out about how to be a real estate developer. So you have to, pair up with human beings. And so all these things, the intern mentorship and the JV are all different versions of pairing up. And, those people, if they're the right people and they have the right knowledge, and, one of the criteria to look for, which you know yourself, Abel, is like pair up with people who have already demonstrated success. If you're a joint venture partner, look for somebody who's joint ventured with others successfully. Those people are happy. They made money. The person themselves, the JV partner, the lead, they've made money. They have a good identity. If you're going to be hire a mentor, make sure they've demonstrated success. And if you're going to be an intern, work for a company that's like going places that has the right, as you said, it has the right attitude around training and knowledge. Because a lot of people, they don't dude, I don't want to spend my time teaching somebody, right, when I can be going doing this stuff. And, every individual is a little bit different. I just, like, for me, where I go with it, Abel, is I had so many great teachers. They owed me nothing. Like, when I was a new project manager, I worked with a couple different people. In fact, one guy I commuted with every day from Long Beach to West LA. It was like a horrible commute, hour and a half each way. And this dude put up with my 1,000,001 questions every day, back and forth. Like he was locked in the car. In fact, we still joke about it. He's like, dude, you were crazy. Hey, what's this? What's this? Yeah. And, he could have said, dude, I'm tired, man. I got nothing left, but he never did that. And, I was just anxious to learn. I was really ambitious to learn. But I think, recognize that if you're going to make that internship offer or seek that internship, know that value trade, right? And when you do find the right person, like, even if you can't recognize the value, just go, like, if I pick the right person, they're going places, they've got a good attitude about teaching. That alone is probably the two main criteria that you'll know value would be produced for you, even if you don't know what that value is. You can't. It's new. It's a new business for you.
Yeah, that's awesome. Well, thank you so much. Even the end, man, I'm looking for an intern right now, Scott. So
Right.
I'm like, this is somebody. Thank you for imparting the wisdom, my friend.
Yeah.
Well, good. Well, I've gone over on time, and I appreciate you hanging with me.
Happy to be here, Abel.
Thank you very much again for all your time, effort, energy, and the resources that you provided our listeners. So if you guys got some value from this, like I said you would, please reach out to Scott. He'd love to talk to you. And then also, if you guys would do the pleasure of rating and reviewing a written review on our 5 Talents podcast, that'll go miles for us if you appreciate these shows. So thank you very much. Again, my name's Abel Pacheco. I'm your host for the 5 Talents podcast. Scott, you're the man.
Thank you.
All right, brother. Bye-bye.
All right. Take care, man. Thanks so much.
Thank you for listening to this episode of the 5 Talents podcast with your host, myself, Abel Pacheco. Each week, we're going to bring you interviews from industry experts and commercial real estate investors who followed their dreams and achieved massive success. Before you leave, let me ask you a few questions. Did you enjoy this episode? Did you learn something valuable? Was your mind stretched to what's possible and what you can achieve? Do you want other experts just like the one you heard today? If you answered yes to any or all of those questions, then please take a moment to subscribe to the 5 Talents podcast, give us a 5-star rating, and most importantly, leave us a written review. Tell us what you liked, tell us your favorite guest, give us any feedback. I'm excited to learn and improve so you can get a more valuable show. So thank you again for subscribing to the 5 Talents podcast.